Hi everyone, today let's take a look at the market price action and the results of the CPI data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Thursday price action was definitely unusual. We got that really light CPI data. I put out a short about it. Markets liked it initially, but the Russell really outperformed, up 3%, while the NASDAQ tumbled over 2% on the day. You can see Russell up 3.5%. Everything was good there. SPX down almost 1%. Apple down 2.3%, NVDA down 5%. Everything on the mega caps was not great. People are starting to rotate into those smaller cap stocks, which are definitely cheap relative to what we've been seeing. We also have Fed officials coming out saying it seems like we're going to get a cut. They said it was a positive CPI, leaning on a slightly dovish Powell. Seems like that cut is coming, especially with slowing growth and a potentially recessionary environment. But on the flip side, we got those interest-sensitive stocks like small caps taking off like a rocket ship today. Moving over to Fear and Greed Index, stepped down to a 52 from a 57, back into neutral, so that's not great. You can see that wick high that we got there on momentum. Strength, still rolling higher. Breadth, still rolling higher, so that's interesting. That is the small caps that we're seeing go higher with that news of CPI and inflation. We also saw that really low level on the put-call ratio. That's obviously stepping higher here today. VIX rolling up. We talked about that yesterday as well. And then safe haven demand stepping into fear from greed yesterday, and then no move on junk bonds. Moving over to seasonality, remember this is a bullish period, so potentially we could see a buy up from the markets that we saw today, but it does seem unlikely with the price action. Just understand seasonality is still bullish. Moving over to earnings, we did get PepsiCo and Delta Airlines. Delta missed on the top line, met on the bottom, put out weak guidance and fell. Similarly, PepsiCo beat on the bottom line, missed on the top, and fell on their guidance. And then tomorrow here we have some of the big banks starting off the real earnings season tomorrow morning. And obviously that's going to be interesting. They've rallied into earnings, so the standards are going to be quite high. Expectations will be high. And if they don't meet them, it's likely they will fall, in my opinion. And then looking at that economic calendar, you can see all of the inflation data coming in lower than expected. Even the jobs data came in a little better than expected, so everything pointing to bullishness there. Fed balance sheet actually went up a little by about $2 billion. Also interesting to see that. Federal budget deficit came in a little better than expectations. Also interesting there. And then tomorrow, PPI and Michigan inflation data. At this point, you would expect that PPI to come in soft as well, especially with what we saw today on CPI. Moving over to Max Payne, stock price 556. You can see call wall 557, so makes sense. Still cannot get above that, expecting a close below it. Put wall 555, 550, so somewhere in there seems more likely, somewhere in this zone. 552, 553, which would be about another 0.5% lower, or 0.75%. Put call ratio very low now at 1.58, indicating potential downside. Total options 679,000, so not a lot of options in the market, giving this a little bit more room to the downside in my opinion. Moving over to the charts, starting off with the S&Ps, you can see that big wick touched the trend line as you would expect, immediately gave it all back, fell 4 hours in a row before finding a little bit of consolidation. Massive volume on that last candle of the day, all selling, so not great. Momentum stepping down, RSI breaking down, big engulfing candle. Wouldn't expect this to hold until we get to that 552.62 area, which is the 9 EMA on the daily chart, and everything looks quite a bit more bearish today than it did yesterday, even with that resistance that we talked about in yesterday's video. Moving over to the Tasty charts, you can see that big down candle, 8 EMA sitting at 554.22, so that would be your next support. ATR support 548.19. Momentum did actually step to bullish a little bit, saw some volume on the day. Kind of interesting on that down candle. And then moving over to that 4-hour chart, you can see we did get the reversal of conditions. So ATR resistance is now at 562.54. So bearish conditions on the 4-hour chart. You would expect to push down to that lowest ATR band, which is currently sitting at 552.48. So right in that same range, 552.19 is the 55 EMA here on this chart. Momentum bearish, big volume, ramping actually, as you can see on this down move. So 552 seems like the likely zone for tomorrow's finish. Moving over to the Qs here, you can see same move. Big move up yesterday, big move down here today. 2.19%, momentum bearish, volume massively bearish. Added some levels at 500 and 492, which is right where we finished here. We're above that a little bit after hours. You can also see that trend line, which did hold. So we went right through this trend line, held the next one. It's not impossible to see a bounce here, but really the 21 EMA makes more sense at 484.31. Doesn't mean we're going to get there in one day or anything, but I would expect more pullback after such a big down day and a close pretty much right on the low. Moving over to the Tasty charts, we can see that big down day, $11 down, broke that 8 EMA at 493.11, and then ATR support at 485.84. Huge volume, momentum actually stepping to bullish. This volume weighted MACD is a little bit fickle like that sometimes, but big move down. You would expect a retest at least of that trailing stop, and then we'll see what happens from there. And then looking at the 4-hour chart, you can see we did break that ATR resistance. As that broke, I took off my position, so I was able to not lose so much money on the day. Changed my positions to bearish. You can also see we hit that lowest ATR band already on the 4-hour chart, which was at 491.98. We're also sitting right on top of that 55 EMA at 490.90. ATR resistance here, 501.59. So we'll see how this plays. Again, huge volume on the 4-hour chart. Momentum, very bearish. So see how it plays. Wouldn't shock me if we found a little bit of support here just because we're already at that lowest ATR band. But at this point, you would expect a little bit more grinding price action to the downside, in my opinion. Moving over to the Russell and the Dow, you can see that rocket ship of a Russell, 3.59%, up more after hours, headed towards that 212.10 level. Go ahead and extend out this trend line. Didn't think we'd be hitting that so soon, but it's right in range here. Looks like we're going to touch it here within the next day. And then look at the Dow, basically flat. Touched the level 398.76, so we did hit the price target. Question is what happens now? Can it continue to gain? Probably not without big tech. Moving over to stocks that moved today, we got CarMax, second day gain, 3.61%. Continues to jump. 82.37 is the next price target. Continues to look very good there. Almost overbought, but still strong. And then you got Home Depot, 2.79%. Right at 354.20 is my resistance here. You can see got this gap, got this consolidation low. If it breaks that, 364.55 would be your next resistance right at this peak from this consolidation. Lots of room, lots of momentum. Definitely would expect a gain here. You can see after hours, it's already above that level. Moving over to Apple and Microsoft. Apple down 2.32 like we talked about. Fully engulfed, took out almost all three of those days. 9 EMA, 223.62. Likely to get there. Momentum stepping down, RSI breaking down. And then you got Microsoft doing the same thing. Big down day, 2.48. Touched the 21 EMA already. Might get down to this trend around 456.27. That 21 EMA is sitting at 451.89. Momentum bearish, RSI big breakdown, volume ramping on this down move. Looks like a topping pattern for sure. Doesn't mean that we can't get a double top or a lower high setup. Certainly possible. But this is a big change here on the structure that we've been seeing. We've seen moves like this. You can see it here. Big down move did continue much lower after hitting that 21 EMA. So if you got a move like that, maybe we get down into the 440 area. But eventually we did recoup those losses, and then we'll see how it plays from there. Moving over to the Mag 7, you can see that big down candle, 3.89%. We talked about this resistance, couldn't get above it for 4 days in a row. Touched it on yesterday's big down candle here, took out the 9, probably headed to the 21 down at 270.15. Also have a level there, 265.08. So that's the zone, waiting to see what happens once we get there. Moving over to Tesla and NVIDIA. Tesla down 8.44%. Momentum stepping down. We talked about that yesterday. We got to step down on momentum. Forecasted that down move a little bit. Also got a catalyst of a potential delay on their robo-taxi. So big down day, 9 EMA sitting there at 239.61. Needs to hold this zone. It's down a little bit more after hours. The level for me is 232.57. If that breaks, we're probably headed back to the 214 area. Still probably going to go higher over the medium term, but short term, this looks bearish. And then you can see NVIDIA down 5.57% after hitting that trend line. Thought we might be able to get to that next level in this all-time high, but this looks like a much lower high now. You can also see the clear divergence. It's a very similar price action on this recent peak, but super overbought there. Similar price action here, but much lower RSI, bearish momentum, big breakdown, big volume, likely to break 125.17 and then head to these lows around 118 at a minimum. And then below that, you got the 55 EMA sitting down there at 109.34. Moving over to Meta and Amazon, we've kind of been ignoring these for a bit because they've been doing the same as everything else, basically grinding sideways. But look at this down day here, 4.11 and 2.37% respectively. Holding this trend line here, next level for Meta would be 489.67. We'll see if that level holds. Momentum bearish, RSI bearish. You would expect this to break down further. It's down more after hours. And then similarly here on Amazon, looking at that 21 EMA there at 191.84, this just looked like it was going to flip. You could see completely fading on momentum, been stepping down for a while. Now we got that big break on volume. 55 EMA is probably more likely at 186.20. Let's go ahead and extend out that trend line right in that same range, 186.89. Moving over to staples and discretionaries. Staples couldn't get the break, still grinding here, whereas discretionaries, big intraday reversal, couldn't quite touch the level 193.81, but you could argue that was probably a top here. Huge volume, big step down, took out the level 189.38. So intraday reversal candle, probably going to break that 9 EMA at 187.66. And then the next level for me would be 185.36. Moving over to financials and oil and gas, these guys had much better days, up 0.79. Talked about it breaking this level, hit the price target, probably headed up to this most recent peak at 42.50. Momentum bullish, RSI bullish. Financials look good going into earnings. Talked about them rallying on earnings. And now we're looking at oil and gas here, 1.7%. It's right at the level 145.92. Looked at taking a position in here, expected the up day, kind of missed it, didn't have a good entry. Being patient, if this 145.92 breaks, we could look for an entry here. Momentum bullish, RSI bullish. So oil and gas stocks finally getting this double bottom coming in. And I do think this is going to have more upside to come. Moving over to oil and copper here, we got oil jumping again, 0.63 and then 0.4 here on the Friday candle because it is futures. So this is probably headed up to that 86 area. Got oil and gas stocks going higher. Copper fell on the day. That wasn't super great, but that 21 EMA could still hold at 448. If that holds, we should push back up to that 4.7 area. Moving over to RIOT and Marathon, these continue to hang in there. They both had positive days, 1.64 and 0.69. Still holding support, still can't get above this resistance area. RIOT testing it again, giving it back, still holding well above this low of around $9. Momentum stepping to bullish, so this looks better again. We continue to talk about these zones holding, and if they're going to do it, it's going to do it now. If not, it's probably going to break down pretty dramatically. Similarly here on Marathon, big wide sweeping moves, zone of support. If it's going to do it, it's going to do it now and probably do it quite dramatically to the upside or really in either direction. Moving over to Breadth, these had huge days here. Makes sense. Russell joining in the move, lots more stocks joining in the move. Really, the Mag 7 is underperforming. Makes sense. And the Russell has lots of participants, probably headed to 86.50 on the 20, right at that 62.25 level, right at the 144, probably headed higher in my opinion in tomorrow's candle. Both of these momentums and RSIs are bullish, and they look solid going into tomorrow's session. Moving over to the dollar, as you would expect, this cratered on that weak inflation data, so huge down candle, 0.46, got all the way down to 1.408. Momentum bearish, RSI bearish, very close to these previous lows here from June. Makes sense that the dollar is going to continue to crater there, and that is giving those cheaper stocks a lot more room to the upside. My next support, if that 104.4 breaks on a closing basis, would be that 103.64 level. It did get really extended on that hourly chart all the way down into that 9 RSI area, so not too surprising. We're seeing a little bit of a pullback, but I would expect that to be met with sellers and then pushed further down into that 103.6 area. Moving over to the 2-year and the 10-year, you can see 2-year cratering, hit the next level at 4.5. See what happens there if that's going to break and push down to this previous consolidation around 4.4. or even that 4.25 area. Whereas the 10-year, it did move down, but not nearly as much. And you can see it's right at these lows here from June, whereas the 2-year is significantly lower than what we saw in June. So still headed towards normalized conditions, even though both of these are falling here today. Moving over to bonds, you can see J&K popped 0.36, big doji. Certainly possible you get an island reversal. It is a setup there, but we broke through the level 94.82. Haven't been above that in a closing basis since back here in March. Probably going to head to this next level up around 95.40. And then TLT, huge volume, big momentum, did what we thought, gapped through the level. Next resistance would be up here around 96. I think we're probably headed to that zone. 96.50 is the next level. Doesn't mean we can't pull back a little, but I do expect this to continue higher. I do like bonds here, and I've been saying it on the channel for a long time. this is a good opportunity to accumulate bonds for the next year or two, and I have been doing that. Moving over to volatility, MOVE index went lower, continuing to go down towards that 83 area. Bonds have been rallying. And then looking at the VIX, gapped up, looking like a rally to that 144 EMA at 13.69, potentially the 200 at 14.36. Honestly, I would have expected this to go a little bit higher than it did here today, but we're still seeing that uptrend, and I think that's going to continue. Moving over to my accounts, you can see I realized pretty early on that this was going to be a terrible market, so I took off my shares, put on a put. Even that was a little bit of a loser, but not nearly as bad as it could have been. Down $11 on the day. Could have been a huge loss for me, but instead I only lost around $400, so still managed to maintain most of that. And then my Russell positions, making money there, so that was up $250, big push there. Still plenty of room on those positions. I also took a put here for tomorrow's session on my main account. That's in a bit of a profit, trying to make some money up there. Otherwise, current position, covered call at 208 for $3, so max profit is 211. Pretty much already there for 7 days. Probably going to roll that up and out. We'll see how that plays in tomorrow's session. It's already up to 211.44 after hours. And then the Q's position, 495 put for 4 days from now, for 341. And then you can see I have my 2 calls on. Rolled this one down to 493. For $3 credit. And then I sold a 500 call here for $2 just to capture a little bit more over that next 2-week time frame. So really low on the deltas, but just barely bullish, as we could potentially see a bounce off that lowest ATR band on the 4-hour chart. Let me know down in the comment sections what you thought of the CPI data or what you thought of the price action here today. How are you adjusting your positions as we go into the next couple weeks of trading? And does this shift your market thesis? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.